For borrowers with student loans, the financial landscape just shifted again. If you've missed a payment recently, it could now be affecting your credit score. Let's talk about what's changed and what you can still do about it. After the pandemic pause, federal student loan payments officially resumed in October of 2023, but there was a safety net, the on-ramp, the grace period. From October 2023 through September 2024, missed payments weren't reported to the credit bureaus. Now, missed payments are hitting credit reports. If you've missed 90 days or more, it's likely already affecting your credit score in 2025. Payment history is the single biggest factor in your credit score. It makes up about 35% of your score. And reports show some borrowers have already seen drops of over 100 points after going delinquent. If payments are missed long enough, loans can go into default, which brings wage garnishment, tax refund offsets, and a 7-year stain on your credit report. If you're falling behind, take action now. Here are 3 possible lifelines. First, income-driven repayment plans. Payments are adjusted based on your income. Some borrowers have seen monthly payments decline substantially. Next, deferment or forbearance. You can temporarily pause or reduce payments. Interest may still accrue, but it avoids delinquency. And third, loan rehabilitation. If you're already in default, rehabilitation allows you to rebuild your credit by making 9 voluntary payments over 10 months. These are not one-size-fits-all solutions, but the worst thing you can do is ignore it. Being proactive is everything right now. We talk a lot about building wealth, and protecting your credit is an important part of that. Missed payments are no longer invisible. They're showing up, and it's important for you to take action. Let's keep moving forward together.